Hey guys, Dave here. Welcome back to another video. If you're new, I hope if you do find this information interesting, by the end you'll consider hitting like and subscribe. I come back with videos pretty regularly, mostly on Rocket Lab, also on different investment ideas and just investing in general. Before we hop into today's video, I have a message especially for you on the other end of this screen. I am inviting you to our new Discord server where we all just kind of get together, hang out, talk about investing, try to come up with new ideas on how to make money, and just work together as much as we can. The big institutions have all sorts of advantages on their end, complicated algorithms, trading back and forth in fractions of a second. So we may as well work together as much as we can to try and make money. We're not competing against each other here. We're just, we're all on the same side. So, if you are interested in joining our Discord and hanging out with the rest of us, click the link down in the description below. And by the way, guys, looks like Rocket Lab's having a great day today on the markets. We're up 6%, so happy to see in the sense that my shares and your shares are now worth more money, although I'm still kind of trying to add some more, so we'll see. What do you think? Is this the beginning of the bounce back? Is this just a little blip? Have we bottomed here? Are we going to go back below $4 a share? Interested to hear your thoughts as always. With that, I just wanted to talk a little bit about today's video. So today I am exploring different possibilities for options trades on Rocket Lab. If you're not familiar with options, basically it can be, I mean, you can play it any number of different ways. So you can play it safe, you can play it risky, but at the end of the day, instead of just buying the stock, you are making a bet on what the stock price will be at a certain date in the future. So you kind of have to be right on both the timing of the move as well as the direction of the move. Whereas when you buy the stock, you can just hold it for as long as it takes to go up, and as long as you're right, eventually you'll make money. So that's kind of the difference there. And obviously, the idea being that if you're predicting a big move in the stock and you're right, you can really multiply your returns and do better by buying and selling options as opposed to just the underlying stock, although it can be more risky. So I'm just kind of exploring this and researching it myself. I'm not recommending you to make any specific trade. I'm just going to talk about my thinking and what I'm going to do. But just bear in mind, at the end of the day, you're responsible for all your own moves. My portfolio is very different from your portfolio. Some things may fit into my portfolio that don't fit into yours. I could have different risk profiles. I might need my money back at a different point in time. So it all depends. It's all different for everybody, and I'm not recommending any trade to anyone out there. I'm just talking about my thoughts as I look into these things for myself. So with that said, I am pretty bullish on Rocket Lab, so I thought, if I really do believe in this company and believe that it may have some big moves in the future, why not explore trading options on it instead of just buying the stock? Of course, I do want to still build a large underlying position and just hold it through the ups and downs, but it is possible to get outsized returns through options, so we're looking into that today. So with that, let's hop over. Okay guys, so we are in my interactive brokers trader workstation here. If you have a different broker, you may have a different tool for trading, but this is the one I use with my main account. It does have a lot of pretty cool options tools that I enjoy using, and I'm going to go through with you right now. By the way, if you're looking for a new broker, I do have a referral link down in the comments below. If you click on it, we both get a little added bonus if you sign up and deposit money. So it is a way to help out the channel and move to a new broker that I honestly think is great and use myself. Now, that being said, let's explore our Rocket Lab options chain here. And personally, we have different dates, obviously, so if we want to make a bet on what the stock will be on August 19th, only 32 days away, we can do that here. Personally, I like to go out as far as possible, give myself as much time as possible, because the markets don't always make sense. Sometimes you can say, oh, this stock should definitely be this price, and then it takes a while for the markets to really pick up on it. So I'm looking out 550 days here, which is the maximum amount possible. We often call this leaps or long-term contracts, so the date is January 19th, 2024. And basically what I'm looking at here is on the call side of things, I can buy the option to buy Rocket Lab stock at whatever the strike is for whatever the commission is. So I'm thinking personally that in 2024, January, I think Rocket Lab stock should probably be worth at least $12 to $15 a share if they execute as we believe they can. Obviously, that's a big if, but I mean, we're not making a safe trade here. So looking at these options here, if I think Rocket Lab will be worth around $15 a share at this date, I can buy a $8 strike for about $1 per share. Or I could buy a $10 strike, 75 cents per share, $12 strike for 65. So let's add this to a little spreadsheet. So now I'd just like to go over a tool Interactive Brokers offers. It's called the Probability Lab. I think it's a pretty powerful tool that I recommend you look into if you are with Interactive Brokers. So let's head over to... Okay, so let's head over to Probability Lab here. Now, what we're seeing is basically based on the price of the market. This algorithm is calculating what the probabilities are that the stock price will be at the end date. So on January 19th, 2024, the overall market thinks there's a 29% chance Rocket Lab stock will be between $2 and $4 a share, which to me is like crazy low, personally. Like especially $2, like that's insane to me. So the market's also saying there's a 24% chance it'll be $4 to $8 a share, 5.9% chance it'll be 8 to 10. 1.8% it'll be 10 to 12, and then on the upside we have a 1% chance it's going to be 14 to 16, 5% chance it'll be 16 to 20. It's a really interesting curve. Usually you see a bell curve where it's kind of highest in the middle and then it tapers off to each side like a little bell. But obviously there's some extreme bears on this and some extreme bulls. So there's some people out there thinking it could be $34 to $38 a share in 2 years. Other people are thinking it could be $2 a share in 2 years. It's just an extreme spread. Not how you usually see it. But having said that, we can adjust this with our own probability and always like to be a little bit safer. So 2024 is just kind of on the fringe of when we expect Rocket Lab to attain profitability. It may not actually be profitable at that point. So I'm being a little bit safe. Let's say 12 to 4, 14 to 16. I think around here is where it's more likely to be. This is kind of the no man's zone for the market. We have the bulls over here, the bears over here. But I'm going to adjust my profitabilities in red versus the blue profitabilities to bring probabilities, not profitabilities. So I'm going to bring down the probabilities for these low ones and these high ones. And we're going to say we think the probability should be something more like this. Oh, we got to lower that. So we have a bit more of a bell here. And I'm adjusting to say that in my custom probability, I think there's about a 20 to 25% chance it'll be 12 to 14. Or there's about a 15% chance 10 to 12, less that it's 8 to 10. There's another 16% chance that it'll be 16 to 20. So obviously massive moves that this would imply in the market, and we can see just the difference between the market implied probability and what I believe, two very different things. Now, if we want to use this tool that Interactive Brokers has to build custom option strategies, we can do that. We can, I kind of only want one leg, so that's one trade because I like to keep things simple. So let's go ahead and build a strategy and see what the optimal trade would be if my probabilities are correct. And what we're saying here is that our best bet is actually to do a short put, which is selling puts. We're going to go into that a bit later, but it calculates your whole probabilities of profit. It's saying 95% chance of profit based on our own graph here, in the red. Our return, maximum return is about 100%. There's a 74% chance, and the return for the risk is 1.33. Now, the break even is actually down at 4.30. So as long as the stock is over 4.30 a share on January 2024, we break even, which to me is, if it's still in the fours in 2 years, something has gone extremely wrong with the company. Like I don't see that. So that seems like a pretty safe trade. We can also go a bit more extreme here and expect a higher profit, but there's more risk. So these are just kind of some different strategies it automatically scans for you, so you don't have to do the work yourself. But we're actually going to do the work ourselves here and calculate out what we think would be a good trade. So let's head back to our Excel sheet and do some calculations. So we have the strike and the premium, and obviously the date is Jan 2024. So how this works is, okay, so first of all, every options contract represents 100 shares. So if I buy one options contract, that'll be $100 because the premium is $1 per share. So each contract will be $100. Let's say I go big here and I buy $2,000 worth, which would be 200 contracts. So we're putting in $2,000 and buying 200 contracts for Rocket Lab at $8. What does this mean? I'm allowed to buy 2,000 shares of Rocket Lab for $8 a share on January 2024. Obviously, I want it to be more than $8, so I'm buying it at a bargain. Okay, so now we're going to go through a few scenarios of what would happen if Rocket Lab is at different prices on that January 2024 date. So let's say Rocket Lab's $4 on January 2024. I'm allowed to buy Rocket Lab for $8. Obviously, I'm not going to do that because I'm paying more than the market rate. That means I lose all my money. This $2,000 is completely down the drain. Rocket Lab is $8 per share, and I'm allowed to, this contract allows me to buy it for $8 per share. Also worthless because there's no benefit of executing the contract versus buying it on the open markets. $0. We lose all our money. Now, Rocket Lab is $12 per share. That means I've made $4 per share on this $8. And I control 2,000 shares, means I've made $8,000 on my $2,000 investment. Not bad, right? 4x. Now, $16 a share means that I make $8 per 2,000 shares, so I make $16,000. Now we're talking really good. Now, if it actually made it all the way to 20, now, as you saw through my probability lab, I didn't assign that a super high probability. But I did give it a little bit of a chance, I believe. Yeah, so I gave this like a 5% chance. Well, 16 to 20, I gave it a 15% chance. So usually I would adjust this more to make it a bit more of a smooth curve. But we have a bit of a chance to have 20 to 22. So if it closes at $20 per share, that means I make $12 a share, minus my premium, obviously. And at the end of the day, that's $24,000. So now we're talking $24,000 off of a $2,000 investment, minus our premium out of that, which is $1. So we're making like $23,000, which is really good, obviously. let's compare this with if you bought the stock. So if I just put that $2,000 in the stock right now, let's call it $4 a share. It's a little higher than that, but let's say you bought it for $4 a share. So what do we get here? It gives us 500 shares. So if we have 500 shares of stock instead of this contract, we basically break even, right? So 4 times 500 is 2,000, which makes sense because that's what the price of the stock is right now. So if it stays flat, then our return is flat. Versus the option, we lose all our money if it stays flat. Now, if it is $8 a share, that times 500, that's $4,000. So in this scenario, Rocket Lab stock has doubled. We've doubled our money versus the option. We lost everything. So that's why it can be really risky. Like the underlying stock has doubled, but we're betting on bigger returns. So that's why we lose all our money, and it's definitely a risky move. So that's why I'm not advocating this for anyone. I'm just kind of exploring it for myself. Now, this is where it starts to get better for the option trade, though. 500 shares at $12 a share gives us $6,000. So at this point, we've made $2,000 more with our option than if we had bought stock. $16 a share, 500 shares is $8,000. So if we really believe that the closing price in 2 years will be $16 a share, we'll make double the amount of money with this option trade versus buying the stock. And then we go to $20 a share. That's $10,000. So if we more than double our return by buying this option, if it goes to $20 a share versus buying stock. So, I mean, obviously this is still a good return. $10,000 on a $2,000 investment is pretty darn good. However, $24,000 on a $2,000 investment is even better. So this is kind of why you might consider buying a call option if you're extremely bullish on the company and you think the probabilities the market is giving the closing price are way off. You can make some money that way. Obviously, high risk, high reward. Okay, guys, let's go through the puts now. So you have this is kind of the opposite. Basically, we're agreeing to pay $8 a share for the stock on January of 2024. Because we're agreeing to do this, someone thinks it's going to be worth less than $8 a share. They're willing to pay us $4.75 a share in order to take on that liability. So what does that mean? We're going to do 100 contracts, and each contract represents 100 shares. So $4.75 times 100 is $475, times 100 again is $47,500. So up front, we're receiving $47,500 on this trade, which is kind of nice because in the call side of things, you actually have to wait until January 2024 or whenever you sell the option to get the money. Whereas here, you get the money up front, but you have that liability on your balance sheet the entire time. Now, let's go through some numbers. Let's say in 2024, the stock is only trading for $2 a share. So we have to pay $80,000 for it. That's $8 a share times 100 shares per contract, and then times 100 contracts. We have to pay $80,000 for the stock. But those shares we're buying for $80,000 are actually only worth $20,000. So once you've bought this $80,000, you can turn around and sell it on the public markets for $20,000. That means you're down $60,000, right? But once again, you've already received $47,500. So we're down $60,000, but we've already received $47,500. So $47,500. That means we're only really down $12,500 at the end of the day. And that's if the value drops to $2 in 2 years, which I highly doubt if they continue on their current growth rate. Let's see what happens at $4 a share. So we still have to buy $80,000 worth for $8 a share, obviously. These shares are now worth $40,000 instead of the $20,000. So that means we're down 40,000, but we received 47,500. In that case, we're actually up 7,500. Now, in this case, we're up 7,500. Let's continue on. Once again, closing price is $8 a share. We can be forced to buy the stock at $8 a share. That means we're paying $80,000 worth for it, but the actual underlying value on the open market is also $80,000 exactly. So we're break even here, but we already received $47,000. So our profit is just that entire $47,500 because we keep the entire premium, and the stock we're paying for is a fair price that we can just go ahead and sell on the open market and get out of it scot-free. Now, above this, the person on the other end of the contract will never exercise it. They can force us to buy the stock for $8 a share when it's really worth $12. They'll never do that because it just doesn't make sense. So similarly, we just keep the entire premium and the contract is worth nothing. Same goes for 16, same goes for 20. So the downside of the put is that you're not making any more if it goes higher than $8 a share, which is the strike price. So even if somehow the stock went to $1 million per share, we still only get $47,500. Whereas on the call side of things, the higher up the stock price goes, the more money we get. Now, the plus side of this trade is that we get the money up front, and it's a little bit safer in terms of we don't need it to go up in order to lose all our money, right? So in this scenario where the stock closes at $4 per share in 2 years, we still made $7,500. Up above, if it closes at $4 per share, we lose our entire investment. Similarly, $8 a share, we lost our entire investment. Whereas here, $8 a share, we made $47,000. So you can make more money if the stock doesn't move quite as much, but once the stock starts moving way more, you'll do better with the call. So if we start getting into like $30 per share, you'll see that your return will actually be better on the call side of things than the put side of things. Now that we understand the kind of trades we could make, let's go back and wrap up, and I'll give you my final thoughts. So we went through a lot of the numbers, and we can see it can be pretty compelling stuff. Of course, a lot of it depends on how the stock performs. You have to really believe that it's going to really multiply and not just kind of be steady and do okay. So am I ultimately buying a call or selling a put on Rocket Lab? Well, January 2024 for me, Rocket Lab's talking about starting to go cash flow positive in 2024 to 2025, so I think it's a little too soon to make such a big bet. So I'm not going to do it right now. I'm going to continue to accumulate shares. It's the safer option. You don't have to worry about the time component. You can just kind of hold them for as long as it takes. However, if in a year, which is when we can get, January 2025 options. At that point, if Rocket Lab is still under $5 a share, I'm going to have to seriously consider buying some calls or selling some puts as a way of just kind of multiplying the potential returns, because at that point, I think it will be extremely undervalued and really kind of spring-loaded for success. So that's where I stand. As we can see, I think the probabilities are pretty out of whack with the Probability Explorer, but I'm not ready to pull the trigger on that just yet because the market can stay wrong for longer than you have on this option. And you don't know when everyone else is going to realize it. So a little bit riskier, and I want to have the time when they turn profitable within that expiration date of the contract. So I'm not pulling the trigger on these right now. I'm going to continue holding and adding stock, and we'll keep watching over the next year or so. If we're still extremely low in a year or two, I'm going to definitely be looking into buying some calls or selling some puts. So that's me. What do you think? Are you interested in any options trades right now? If you really believe in Rocket Lab, you may think it's worthwhile, but again, it also depends on when you think the stock is going to move. So you have to really believe it's going to move within 2 years in order to make this a good trade. Let me know what you think down in the comments below. Thanks. See you next time.